Artificial intelligence, or AI, has revolutionized the world, and the financial sector is not left out. AI is now at the forefront of innovation, and investors are on the lookout for more ways to profit from this technological surge. This has given rise to AI ETFs, and this is an excellent way to diversify your investment portfolio. In this video, we will reveal the 7 best artificial intelligence exchange-traded funds to invest in for the year 2024. You may be wondering how the top 7 picks in today's video were selected. We analyzed performance measures, fund management methodologies, fee ratios, and the diversity of holdings within each ETF to get the list of ETFs to you. Now let's dig into our top 7 AI ETFs for 2024. Number 1. thnq, Robo Global Artificial Intelligence ETF. Kicking off our list is the thnq Robo Global Artificial Intelligence ETF. Seeking alignment with the Robo Global Artificial Intelligence Index, this ETF curates a selection of firms that not only contribute to, but define the cutting edge of AI research and product development. The repercussions of this specialization are significant. Investors have exposure to a sophisticated and dynamic market segment, populated by enterprises making critical advancements, from the refining of machine learning algorithms to the development of decision-making systems across industries. The historical performance of thnq, the Robo Global Artificial Intelligence ETF, has shown fluctuations influenced by the dynamics of the artificial intelligence sector. Investors have witnessed periods of growth and volatility, reflecting the evolving landscape of AI technologies and market trends. thnq has demonstrated good historical performance over the past year, returning over 36% in a year. The promise of thnq rests in its variety. The ETF's extensive portfolio extends beyond just software makers to encompass hardware producers, service providers, and organizations that derive a considerable amount of their income from AI-related operations. Such exposure gives a complete approximation of the AI innovation ecosystem that, while dispersed, coalesces to produce a landscape altering everything from consumer experiences to industrial processes. Number 2. SPRX SPEAR Alpha ETF. Our next candidate is sprx, the SPEAR Alpha ETF. In an environment where the inclusion of AI is becoming a cornerstone for competitiveness across industries, sprx targets an array of firms that utilize AI as a strategic asset. For an investor, sprx provides a fascinating opportunity. It feeds a portfolio with firms that employ AI to enhance operations, personalize customer service, and reinvent product offerings. The SPEAR Alpha ETF, or SPRX, has demonstrated a strong historical performance, being listed as one of the best performing AI ETFs with a 68% gain over the 1-year period. The reach of SPRX is significant. It connects with various areas where AI-induced innovation is crucial, such as healthcare and financial services. Industries in which data-driven decision-making and predictive analytics are pillars of success. Through SPRX, an investor interacts with a slice of the industry that uses AI not merely for its novelty, but as a driver for company change and competitive agility. Number 3. IGPT, Invesco AI and Next Gen Software ETF. The IGPT ETF from Invesco concentrates on the firms creating the software underpinning for tomorrow's AI applications. As these applications develop in sophistication, they demand increasingly advanced and powerful software solutions, a reality that positions the components of this ETF at the forefront of a huge technological wave. IGPT has delivered close to 29% returns in the last 1 year. IGPT presents a tech-heavy investment opportunity, replete with potential for development as our dependence on intelligent systems grows. Investors in this ETF back the architects of AI's backbone, betting on those who provide the essential tools from which AI innovation is expected to spring forth, be it through the development of new machine learning frameworks, cloud-based AI services, or cybersecurity measures tailored for the unique threats faced in an AI-centric world. Number 4. AIQ Global X Artificial Intelligence and Technology ETF. With the AIQ Global X Artificial Intelligence and Technology ETF, the investing emphasis is broadened to embrace not just firms actively engaged in AI's progress, but also those prepared to gain from its widespread deployment. The breadth of AIQ gives a more broad cut of the technology industry, allowing investors a path into the predicted overall sector development. AIQ has delivered an amazing 42% return over the course of a year. AIQ taps into the premise that the technology sector is not a monolith, but a rich tapestry of diverse organizations and activities, all of which stand to earn large advantages via the adoption and integration of AI. By adding organizations that are progressing and deploying AI and technology in various ways, AIQ distributes capital into a potentially high growth market segment while retaining a level of diversification that might lessen the risks associated with more specialized funds. Number 5. Botz, Global X Robotics and Artificial Intelligence ETF. Botz encourages investment into an even more precise subset of the AI universe, enterprises that are prepared to profit from the growth of robots and AI. With a concentration on industrial automation and autonomous cars, Botz encapsulates an investing thesis anchored in the physical applications of AI, where software meets hardware to build more efficient, accurate, and safe machines. The historical performance of Botz suggests that they have delivered 27% returns in the last 1 year. An investment in Botz is a gamble on the evolution of the production line and logistics networks, as well as on the rising presence of robots in everyday life. As such, the fund connects an investor's fortunes to the rate at which sectors embrace automation and the extent to which consumers welcome autonomous systems into their lives. A sector primed for development given current trends in technological adoption. Number 6. IRBO, iShares Robotics and Artificial Intelligence Multi-Sector ETF. The IRBO ETF broadens the investing lens even yet, offering a diversity of AI and robotics firms from a range of sectors. With a reasonable expenditure ratio, this investment vehicle promotes itself as an accessible means to involvement in this booming industry. The draw of IRBO is its cost-effectiveness mixed with its varied portfolio, which might be particularly enticing for individuals who are conscious of prices, while yet having a piece in the revolutionary force of AI and robots. IRBO has delivered close to 13% in the last 1 year. By selecting for IRBO, investors adopt a more complete approach, recognizing the depth and breadth of the AI revolution. It entails investing not just in firms that manufacture robots or develop AI, but also in those who use these technologies across multiple markets, from health diagnostics and precision agriculture to smart manufacturing and logistics. IRBO's wide approach understands that the future of AI and robots is as big as it is varied. Number 7. ARKQ, Arc Autonomous Technology and Robotics ETF. Finally, there is ARKQ, the Arc Autonomous Technology and Robotics ETF, administered by ARK Investment. This fund focuses particularly on startups likely to profit on the breakthroughs in autonomous technology and robotics, components key to the AI revolution. ARKQ concentrates its resources toward firms that are altering the world via breakthroughs in fields including autonomous mobility, aerospace, and automation. ARKQ has delivered close to 8% return during the last year. Managed by ARK Invest, a business recognized for its focus on disruptive innovation, ARKQ is symptomatic of a more themed investment methodology. Investors in this exact fund are individuals who embrace a vision of the future populated by self-driving automobiles, drones transporting commodities, and robotic systems that transcend human capabilities in both speed and precision. This ETF is not only an investment in an AI sector, it's a stake in an idealistic image of the future, where technology redefines not only corporate efficiency, but also ordinary human experiences. Summing up, these ETFs from thnq to ARKQ provide investors several perspectives through which to engage in the AI and robotics revolutions. From broad-based tech funds to specialized slices of the market, each ETF expresses a conviction about where AI will lead us next and the firms that are best positioned to take us there. ETF investments entail risks just like any investment. However, they also hold the revolutionary potential of AI and robotics, fields distinguished by continual innovation and development. As with any financial choice, it is vital for investors to undertake comprehensive research and examine their personal investing goals and risk tolerance before engaging in these future markets. In conclusion, AI ETFs offer a wonderful opportunity to participate in the future of technology and innovation. By picking one or a mix of our top 7 AI ETFs, you're positioning your portfolio to possibly gain from the AI boom. Which of these AI ETFs caught your attention? Let us know in the comments below, and don't forget to like, share, and subscribe to our channel. Thanks for watching.